Welcome to Agoracom CEO Interviews. This is our next installment in our CEO Leadership Series out of the small cap space, where we're talking to companies that are actually making things happen, especially in the junior resource space. With us today for the first time, I'm happy to have Dunnedin Ventures. They trade on the TSX Venture Exchange under the stock symbol DVI. Joining us are Chris Taylor, he's CEO and president of the company, as well as Alan Barry-Laboucan, special advisor to the company, and all of you know him as our chief market commentator at Agoracom. Now, for those of you who are new to the DVI story, and that's going to be a lot of you, here's a little oversight. They've got the Kahuna Diamond Project located in Nunavut. It's an advanced stage, high-grade diamond project that was discovered back in 2001. The company states that they got three main diamondiferous kimberlite dikes have been discovered. We're going to talk about those, and they say they're comparable to producing diamond mines. More than just lip service, the largest diamond recovered was a 5.5 carat stone that actually been broken during the sample process, and it was reconstructed as having an original size of 13.5 carats. So here to talk more about the company are Chris and Alan. Gentlemen, welcome to the show.
Thanks for the introduction.
Yeah, thanks, George. It's a little bit of a turning the table for me. Usually I'm the one doing the question and asking.
Yeah, you got yourself now.
And by the way, for everyone, for those who are even new to the cast of characters here, that's Chris to the left. He's the president CEO, and Alan is the guy representing us all in Movember with his great with his great dude there. So
the real handsome one.
So guys, here's what I'm finding interesting. Chris, in the press release announcing when you guys had signed, I believe, an LOI back a couple months ago, you said, quote, "This acquisition is transformative for Dunnedin."
Yeah.
Why? And you know, tell me what's so great about it that it could be transformative, that Kahuna could be transformative to Dunnedin.
Well, the main transformation for us is the transition into a diamond focus for the company. Dunnedin was essentially a shell company. We'd restructured it after participation in the market from, say, 2011 to 2013, and the company was looking for a new direction. So, you know, in this case, great minds think alike, although that's putting myself up on a pedestal. But Alan and I are two guys sitting in front of you that really felt like diamonds was the right way to go in this market especially. And given the trends in global diamond prices and the mining markets in general, diamonds are a really bright spot in the commodity space that we think is going to generate a lot of value for our shareholders. And you know, as I've said to Alan many times, it's a little bit ironic for me because my family had a history in the diamond business for many generations. So we could talk about that at some point, but certainly involved in the diamond import business in Antwerp and then in Canada. So as a geologist, you know, I was very interested in getting back involved in the diamond space. So it seemed like an excellent opportunity to go ahead and do that.
And George, also it was kind of a confluence of both groups going in the same direction. I have a partner that I work closely with. He's a local businessman that's very well known. He and I had been working for a couple of years on trying to get a diamond company going. At the same time, Chris was seeing the exact same thing and was doing the same thing, and then by chance, the two of our, we had a mutual friend that introduced the two of us, and so that's how sort of we got together to work on refocusing Dunnedin and moving it in the diamond direction.
Now, to prove to everyone at home that again, that Alan and I never have these love-in kind of conversations, that it's intelligent conversation, but it is frank conversation. You know, Chris earlier said we figured diamonds was the way to go. That's something I haven't heard in 7-8 years. Like somewhere around 2005, 2006, diamonds were big. They were popular. You had we had a couple of clients back then in the diamond space, but they all fizzled out. Couldn't make it work. And since then, I really haven't heard a lot outside of maybe Canadian diamonds that Alan had actually picked on our show a year ago, and has turned to be a major success. Why? And Alan, maybe you can talk to this. Why are diamonds the way to go when we haven't heard? Are you guys just so contrarian that you're right at the head of the line of a major paradigm shift?
Well, both Chris and I are of the contrarian mindset, and we're also, we're truth machine kind of guys. We both focus on what the truth machine tells us. But in a general sense, George, what I was seeing happen a couple of years ago was that while commodity prices were getting beaten down, the price of diamonds were actually going up. And so of all the commodities that I follow, diamonds have been sort of the shining bright light in the sector. And I started seeing this come to pass about a year ago. Not only Canadian diamonds, but you look at Mountain Province, you look at Lucara. Well, every other resource stock was getting beaten down. These ones were starting to get financed and starting to move in the right direction. And that's what we're talking about as far as diamonds, and why we wanted to make a real run at. But you're right about the longer term scenario that, yeah, it had gone dormant. I think when it really got bad, George, for the diamond sector was after the 2008 economic collapse, and the prices of diamonds got smacked down dramatically, and the financing for exploration and development of diamonds also was impacted quite negatively. And so, now it's a bit of a renaissance for Canadian diamond exploration, George. And what I really like about it is, seems that the only ones that are getting funded are those that have real good quality projects.
Yeah, and at the end of the day, that's it. I mean, not to be too hard on you guys, but it doesn't matter what the resource is. If you've got a great project, it's going to be successful. And so that's what I want to talk to you about. You guys had said in a recent press release, quote, and I'm reading here, we're excited to rapidly advance this project towards feasibility. And there's a second part to that quote, but I want to deal with that first, then I'll move to part two of that. So, Chris, that seems like it's incredibly advanced. Give me an ETA on advancing this project towards feasibility. What's it going to take in terms of dollars, and what's it going to take in terms of time?
Well, that's a good question. It's a great question for us because one of the reasons that we selected this project is because it is very advanced stage. I know companies will say that in press releases at times. Al, I think we calculated the other day, we think there's about $30 million that's been spent on this project thus far. And that spend, it's a very significant spend. It led to the discovery of these major diamond-bearing targets.
I'll interject that, George, that was prior to 2008.
That's right. Right. So during that initial period of real activity that you were following in the market, there was a company in here, a predecessor operator, spending all that money, and they did good quality science. They found these very high-grade diamond-bearing kimberlites, and that's where we're coming in on the heels of in order to pick up where they left off and continue to advance the project. So there's a few key steps in any sort of advance towards feasibility. The key steps that we're going to go through are the same as what any other mining company would go through. In this case, first you figure out what you have in terms of the results of all that work. Then you want to produce some sort of resource. Then you want to do the economic studies, and finally you go through full feasibility. So in our case, because of the huge volume of work that's done, we think we're going to be looking at a pretty short timetable here in order to generate things like the first key steps, like that resource number. That's really going to distinguish the company from a lot of other players in the diamond space here.
In this case, George, we basically get to ride on the coattails of a very strong technical team that did great work in the past, and just keep going with that work. They never got to the point of doing a National Instrument 43-101 resource calculation, but they did all the work required to do that calculation, and now we get to pick up the torch and move the project forward.
It's like we don't have to spend that $30 million. There aren't many companies that are in that position. And it took, George, it took a hell of a long time to find this project. We were combing through the repertoire of Canadian projects. Yeah,
at
two sides.
Yeah,
right?
I was doing it, and he was doing it, and now we're doing it together. So it took us a lot of work.
So what do we know about the project at this stage then? It's obviously very advanced. There's $30 million of work done, and I know you guys got to comb through that to come up with even, I guess, more conclusions and more data, but what do we know about it? What do you know about so far that Chris encouraged you to pay $700,000 in 11 million shares over 4 years? Because that's not a cheap price tag at the end of the day.
For clarity, before Chris gives you the reason for that, George, that's staged payments and staged stock.
Yep.
So it's over a 4 or 5 year period. It's not like we have to put that money all up front. But Chris can answer your question.
It's a really simple answer to you, George. The rock that I'm holding in my hand, this is a chunk of the Kahuna Dike. This is a kind of rock that has over 1 carat per ton of diamonds in it, and we know that there's a lot of this material on the project. So we get to come in, and the answer to your question is twofold. One is lots of diamonds, and 2 is big diamonds. And Al is probably going to talk your ear off, because I just gave him an entry point, about the validity of a project. Once it's shown that it has big diamonds available on that project, that makes it stand out head and shoulders above other properties that might be at a similar phase of development.
You know, George, I can put it into a little bit of context based on my, my analyst hat that I wear most of the time when I'm doing the commentary for Agoracom, but what they had done there in the past was quite significant. But the biggest thing that I had, as far as drilling goes, the Truth Machine tells us that we know there's the Kahuna Dike. It's been drilled for about 5,000 meters. It's still wide open. There's another 2 dikes that are both diamondiferous. They come with good grades, but in a general sense, like in a big picture sense, George, whenever you find large diamonds, those are hard to find in your small samples. And whenever you do, you really want, as a diamond guy or diamond person, you really want to roll up your sleeves, because that's the whole thing that makes a diamond mine. It's not your small diamonds, it's your big stones. And so we know that we're in an area where there is big stones already based on the work that they have done. But to even put it into more context, George, if you take the size of the sample that they had done, so they took 360 tons of rock out of the ground. That's called, we used to call that a mini bulk sample, okay? So if you look at all the mini bulk samples that have been done throughout Canada, in that, up to that stage, the largest diamond I had ever seen was about a 4-carater that came from the diavik ground, stuck inside a drill core. You just, from these are fairly small samples from a geotechnical perspective, but to find that size of a stone, it's unheard of in Canada. It's the largest stone that's been found at that, up to that stage. So, you know, these are reasons why, as a diamond guy, I get really excited when I hear that.
I hope that answers the question, George.
No, that does. And which leads me to, okay, so it sounds, now we're getting to the other side of the pendulum. By the way, as a point of reference for everyone at home, when Alan talks about the Truth Machine, because he talks about it on our weekly show, and a lot of people are going to be new here, the Truth Machine means drill results. Whatever, what the diamond, what the drill bit says is what it is, and no hype and no storytelling, and that's why he likes certain projects that he likes, and obviously that's why you're there, Dunnedin. So now, swinging to the other side of the pendulum, it sounds fantastic. You've stated that it's the strike lengths, widths, and grades are comparable to producing diamond mines. How are you guys able to pick it up? When is it because everyone else is too focused on the traditional stuff, and you guys, you know, broaden your horizon, said let's go where nobody else is? How are you able to pick it up? Because now it's almost seemed like 11 million shares and $700,000 over 4 years isn't that expensive now.
Hey, don't tell that to the guys we optioned it from, Georgie.
Yeah, that's right.
But Chris can give you the history on that, George, as far as why we stayed, or how we were able to stake such a good property.
That's right, and it involves the history of our predecessor company on the project, and I suppose we should talk about that a little bit. The company was called Shear Minerals, and Shear made all these original discoveries. They were trading at very high valuation based on
Shear and Stornoway.
Shear and Stornoway. Stornoway was the joint venture partner on this project. Unfortunately, they had bad timing with respect to the diamond market, certainly worse than what we seem to be seeing in the market right now. They went into the 2007-2008 boom and then bust in an environment of declining diamond prices, and they had very limited options for being able to pursue any kind of work. It didn't really matter what they were hitting in the ground. The market was so bad that they had very limited options. What ended up happening was the company became involved with De Beers. De Beers debt financed them through putting a different project. It's entirely unrelated to the one we're dealing with. They ended up financing the company to put that one into production, and it was more like a rehabilitation of an existing mine, and that was called the Jericho project. I'm sure with a little bit of Google you could look up the history of that. Jericho did not go well for the company, and De Beers ended up canceling the backing and calling in their debts, at which point the company effectively ceased to exist. If you'll know, in that time...
What did De Beers end up doing with the Jericho? Did they keep for themselves and turn it into something privately and internally profitable?
Oh boy. Jericho right now is sitting...
No, he's talking about our ground.
Oh, our ground here. Yeah, our ground here.
I'm talking about Jericho. No, I actually was talking about Jericho.
Oh, sorry.
Yeah, the Jericho itself is the subject of a government debate right now. Certainly a fair amount of interest with government regulators.
It used to belong to Tahara, George. That was Tahara's diamond mine.
That's right.
Okay.
That was not feasible, and these guys, Shear went in there to try to prove that it was possibly feasible if they could recover more diamonds. It didn't work out very well, and like Chris said, they went basically bankrupt, and so then the project was dropped by De Beers, and we think that they weren't aware that they had dropped it, but the guys the prospectors, that they were aware and went out and staked it, and then we did a deal with them.
That's right. That's how we ended up with it in our hands.
Well, that sounds, and that's how it happens sometimes, right? You got to have your ear to the ground. You got to be involved in the industry, and you got to know when stuff slips through the cracks. And the fact of the matter is, pardon the pun, but even in the mining industry, stuff.
And you know what, George? You'd be surprised, but it happens a lot more than you would think. And you got to also put it into De Beers' sort of perspective. They're busy building a mine with Mountain Province. They're building mines everywhere. This is sort of a project that needs more work, but they're not really the guys that do that kind of work. We're the kind of guys that do that work. And so I think that that's got reasons why it may have slipped through the cracks for De Beers.
Let's talk about diamonds in general then, because I think we've talked enough about the project that people watching at home should now go do their own due diligence, because we're not here to make everyone a diamond specialist, nor are we here to educate them on every nook and cranny of Kahuna. So clearly, ton of work on it. You don't spend $30 million on that in one shot. Logic tells me that anyone spent $30 million spent $500,000, things look okay. Spent another couple million, things look okay. Spent another $5 million, another $10 million. So obviously there is something there, especially when you got De Beers and Licks of them all involved. But again, market timing. So we got that. So that's fantastic. What's the diamond industry looking like around the world? Because you guys did talk about De Beers a couple of times, and my understanding still is that De Beers does, act as its own cartel and controlling the price of diamonds. Is there a risk there, or because you've seen those news stories where De Beers apparently has vaults and vaults and hundreds of thousands of square feet of diamonds that it keeps off the market by design in order to keep prices high. So, what's the state of prices right now, and where do you guys see the price of diamonds over the next 5 years, based on not opinion but some kind of empirical info, if you've got it?
Yeah, well, George, that rumor has been around for a long time, and I think you have to put it into a context of De Beers had to go and get bought out by their large partner, Anglo American. If they had a big store of diamonds, I think they would have sold it, or at least now that Anglo's in charge, would have sold it You know, but what I can go on is what I do see in the market as far as diamond production. Now let's look at the mines that are in production. You've got Udechnaya in Russia, that's their big diamond mine, and Mir. Both of those were found over 50 years ago. In Botswana, you've got Jwaneng and Arapa. Those are big monster mines. They were found 40 years ago. In South Africa, you've got the Premier Mine and a few other mines. Those were found like 100 years ago. So what I'm getting at is all the producing mines, except for Canada. Canada's got 2 or 3 mines that have been in production for about 5 years. They've got about, or 8 to 10 years. They've got about another 8 to 10 years left in them. The ones that are currently in production. So that's the scenario for current producers. Now they're not able to keep up with the demand currently with those producers. So then you start looking at the mines that are in development. The mines that are in development will not be able to reproduce the diamonds that are being lost from the age of the mines that are currently in production. So the development stage is not where it needs to be. Then you look at companies in the advanced stages where we are. And there's not enough of those to make new developing mines to produce what needs to be produced that you're mining out in your current production. So the supply chain is very much pointing to a tightening that will continue to tighten. It looks like 2006 was our peak production year worldwide, and we've been declining since then, and that's because of that scenario with the various different projects. And so then you look at the demand side. The industrial United States, the demand is starting to grow again now that the economy is gaining strength, but the real story on the demand side is from China and India. They're becoming a larger and larger player. It seems like they've taken to diamonds like they've taken to gold, and it's becoming more of what they adorn themselves with, and they will play a bigger role. So, George, you've got a declining supply chain and a strongly growing demand. That at today is the demand is stronger than the supply, and it's only going to grow in the future. So diamond prices are looking good for the long term.
All right, last question for you, Chris.
Yep.
Tell me, where is the company a year from now? I'm not talking about share price, things like that. I'm talking about you've now got this tiger by the tail. Obviously, I know that one thing you embark on is additional bulk sampling and resource definition. So what's the ETA on that? Is that longer than a year? Is that within the year? And how much money are you going to need for that?
Certainly within the year. We're going to be looking at, in that time frame of, say, about a year, you'll be seeing resource go out to market, certainly a first resource based on work that's already been done on the project. And then after that, based on what we've seen, for instance, we had a meeting this morning with an engineering group that did all the past work for the predecessor operator company. So we've been looking at digital mock-ups of the drill results, of the sampling results, other things like that. It's my intention to, you know, as all of us involved with the company, is to put out the first resource and then expand on it. So you're not going to be looking at a single point of information hitting the market. It's going to be a process of ongoing development. And we'll do exactly what we said we'd do in the news release. We'll continue to advance the project towards feasibility. And so for us, the amount of money that's involved, realistically, you're looking at getting a lot of value up there because of the synergies with proximity to Rankin Inlet. You're only about 15, 20 kilometers away outside of town. You can save a lot of costs that you might see elsewhere in the Northwest Territories. We think very realistically, with well under $2 million spent, we're going to be getting that first resource number out to market, and we're going to be getting expansion on it as well. So that'll see us really show the market what we have in our hands here.
And George, you know what, we're trying to sort of follow the model of, we do our initial resource calculation, so we come up with an inventory of how much diamonds are there based on the past work. Then it'll be our job to expand on that. So we will go and do additional work on the known kimberlites to try to expand the size. and then we'll also be looking for new discoveries as well. So those are the immediate things that we're going to be working on towards. Hopefully, we find some new kimberlites, and we can continue to expand that resource of diamonds.
That should be the process out. Like when we look at the data, like we were looking at it this morning, right?
Yep.
We can see that it appears that there's excellent continuity on these kimberlites. That seems to be one of the takeaway points that we saw based on the drill information that we were looking at just about an hour ago. And as we continue to do the work, I think you're just going to see a steady flow of information about bigger and bigger and bigger on the resource. That's what we expect to be issuing to the audience and benefiting our shareholders.
And we're not just throwing that out there, George.
No,
these are
I would expect you to be doing that.
Well, basically, understand it like this: if you had a structure that had diamond-bearing kimberlite in it that was, say, 5.5 kilometers long, and we put out a resource number that's maybe based on, say, three-ish kilometers of that, but only very shallow. I mean, you could see that the number that we'll be using for the market when we get to that point will be a small fraction of what the total amount of kimberlite-bearing material is on the property. So as we continue to advance it, the number that will be available publicly will keep going up, and that's what we want to see. That should be something that distinguishes this project from just about every other project that we're looking at. We're not looking to find indicator minerals. They are there. There's tens of thousands of them that have been found and probed. We're not looking to, say, do a till sampling, grassroots type discovery program. We're looking to add meat to the bones of this project through successive releases of that resource type information.
And guys, that's a perfect place to leave it off right there, because you do have a lot more that's going to be going on. So we expect you guys to be on a lot more as you hit some of those milestones. So thanks for doing a great job. This is exactly this is why we have you guys on the show, right? It's not just because Alan is involved with the company at the end of the day. Agoracom still has to go out there and help find quality for its audience. And you've got a real project, got great people on board, you've got a plan. And that's what we're trying to demonstrate to people, that just because there are a lot of zombie companies out there, there are a lot of great companies, in that bucket that are moving things ahead, that are leaders. And Chris, especially to you, I was really happy to have you on and meet you and talk to you for the first time.
George, this whole show goes back to what we've talked about the reason we started our shows, right? We're talking about trying to help the audience out there differentiate between what company was a zombie company, what was a sort of a dormant company, and the leaders out there that, regardless of the condition of the market, are aggressively moving forward. And the thing that I wanted to mention earlier that I forgot to, George, is that regardless of whether I'm looking at working with a company or talking about it, it all has to come down to the technical merits. Mm-hmm. And I invite anybody who's well versed in the mining diamond business to go out there and look at all the various different advanced stage projects. And if we don't come out at the top of the list, I'd be surprised.
All right. Well, we're going to hold you to that, because you're going to be under a lot more scrutiny as time goes on. But I'm pretty confident that you guys have that meaningful prospect for success. That's all we're looking for. There are no guarantees, but you're off to a great start, and really want to thank you guys for being here.
Thanks, George.
Thanks a lot for having us, George.
Yep.
You've been watching Agoracom CEO interviews in the leadership in our leadership series, our next installment. You've been watching Dunnedin Ventures. They trade on the TSX Venture Exchange under the stock symbol DVI. Make sure to go check out the company on the web, or take a look at stock ticker, get more information, start your due diligence, follow the company, and see if, in fact, as they hit these milestones over the next coming weeks and months, it pans out to the story that the gents have been telling us, but I have very little reason to believe otherwise. Thanks for joining us, everyone. Have a great day, and we'll see you next time.